Yo guys, welcome back to the channel. Well, it's not really a welcome back because it's the first video, but you get what I mean. Literally in today's video, I'm just gonna sort of talk about my trading over the past 2 years, explaining trades that I've also taken this week. Well, just one trade I'm gonna go into detail about why I took it, how I took it, what I was looking for, and also explain sort of my journey and what sort of strategies I was trading in the past and how I sort of found my way to trading how I'm trading now. So yeah, let's get into it. So essentially how I started sort of trading, first I actually started off with crypto, and with crypto I was literally just trying to look for altcoins. There was no strategy behind it, just trying to find altcoins that could possibly 5x and make me a bit of money. But eventually I sort of realized that's not sustainable whatsoever. You're literally just gambling at this point. You may as well just go to a casino. So I started to do some research, started off with FX, learn how to use the platforms like MetaTrader, which I'm still using now to execute on prop firms on my personal account. But yeah, I sort of just was trading on MT5, like basically would open up a chart like this, draw supply and demand, resistant, trend lines, all of that stuff. But they weren't working at all. Literally, I was not having no luck. I was like, bro, how are people trading? Like, how do you, like, what's the confirmation that these guys are getting to execute a trade? Because literally all I was doing is like, oh, okay, if price comes here, for example, there's resistance, so I'm going to try and short that. But I didn't know that the market, there's other ways the market moves. There's different participants that operate in different time frames that won't respect, a resistance level or support level. So yeah, after a couple of months of trying that, eventually I was like, you know what, I might just give up at this point because nothing was really kicking in. I think I took like a week or 2 weeks break like last year, just to sort of get away from trading the charts. I started to actually watch videos, and I was just searching and searching, and eventually I came across this ad. I think it was from G7FX, which is Envy. Some of you guys probably know about him, but yeah, it was his video sort of talking about order flow, footprints, and whatnot. And I was thinking I was just another guy just trying to sell a course to it. But I sort of watched his videos, started to think, okay, this is actually a better way of understanding the markets. It's actually no subjective, well, there is subjectiveness because you can analyze the order flow differently, like everyone analyzes it differently, but what you're seeing is pure data. It's not fabricated. It's on an exchange that everyone can trade on. Now obviously the bigger firms and banks, they have dark pools, so they trade amongst each other, but majority of people can execute trades on a exchange, which CME example for currencies and indices. And then you've got, I think COMEX, I think it's COMEX, yeah, COMEX for precious metals, commodities, oil. Actually not oil, oil's not on there, but precious metals is on COMEX. So yeah, you've got exchanges where people can trade on. So I was like, okay, right, I'm gonna start actually putting in some time and start analyzing these sort of new ways of trade, not new ways, but this order flow thing. I'm gonna start researching about it, put some time to learn how it works, what to look for. So that's what I did. Obviously Sierra Charts is what I'm using now, but at the time I always just have this mindset of not paying for things straight away until I learn it. So I was looking for a free platform, and eventually I came across this platform called Delta River. I'll leave a little screenshot of what Delta River looked like and how I was using it and whatnot. But yeah, I was using that to sort of analyze transactions between buyers and sellers. Now, it wasn't the best of platforms, don't get me wrong, but it did the job. And that's how I sort of built experience and sort of compared the videos I was watching, and then sort of used those videos as a reference point, went back to the charts myself on the Delta River and sort of, just did demo trading, trying to trade properly with the footprint in front of me. I'll also get into how I learned about TPOs and auction market theory and whatnot, but I'll stick to footprint for now. So yeah, where were we? Oh yeah, footprint. Right. So footprint, I want to say like 3-4 months just learning imbalances, finish auctions. What else is there? Value area shifts in terms of, you know, on the footprint, you can get value areas that shift up higher. That indicates obviously bullish momentum, and then vice versa for shorts, value areas shifting lower. So I started to sort of incorporate all these little minute things that you could analyze on the order flow that can give you an edge in the market. I also hit a little stumbling block with order flow as well and footprints, because I got to a point where, all right, I'm learning something new here and it was working, but then it got to another point where you hit another like barrier of, okay, when it's not working, now what do? Are you going to switch back to what you was doing before, or are you going to, you know, keep it consistent, keep going? Because I used to think that, oh, this order flow thing is going to literally turn me into like a 90% win rate trader, but eventually I started to realize as well that win rate doesn't really necessarily matter. But that's what I sort of thought at the time. I was thinking, oh, okay, this thing's gonna, you know, boost my win rate to the point where I barely take any losses. But when I started to have consecutive losses using sort of order flow and footprints and whatnot, started to sort of doubt myself in terms of, oh, okay, maybe this isn't what I thought it was. And that's when I sort of realized, okay, there's discretionary trading with order flow. It's not, what's the word that I'm looking for? It's not concrete. It's subjective and it's discretionary, because each person can sort of analyze the order flow differently depending on what they see, depending on their emotions, depending on, you know, what economic data they've read or what, you know, research that they've done. So yeah, then I've reached this stumbling block, and I can either stick to what I'm doing, which is, you know, keep consistent with trading sort of what I've learned about order flow in terms of what I want to see when prices come into a certain point of interest, or I can divert and go and hop into another strategy and look for something else. But I decided to just stick it out. My trading actually did get worse during the period because I kept trying to gamble during news. I kept trying to, you know, look for that big impulse move. But obviously that's not trading, that's gambling. And it takes a few times for you to gamble for you to realize that it's not working. It's like that saying, you know, insane is doing the same thing over and over again, expecting different results. I'm making a video. Do you wanna not come back again? Yeah.
I didn't say so.
I don't know. I can't put a sign there saying I'm making video. Please. Yeah, true.
She's got a point. She's an icon. She's a legend, and she is the moment. Now, come on now.
So after I realized that a lot of the trading I was doing was this discretionary trading, because I was mainly just using the footprints and basic support and resistance to look for levels, I wanted to incorporate something that had a bit more foundations, that had a bit more legs on it, and be like, okay, this is something I want to start doing going forward. And that's why I came across auction market theory. Well, I want to say auction market theory with a pinch of salt, because I still don't use the proper theory properly. However, I do use part of it in my trading or whatnot. So that's when I started to watch more videos on YouTube about TPOs, volume profile, using volume weighted average price, better known as VWAP, using the heat maps. Heat maps is just book map, if I'm being honest. It just shows you where resting orders are, where resting liquidity is. So I was using that, and that's where I started to find a bit more consistency into my trades. I wasn't taking trades just based off what was happening on the footprint. I was taking trades based off a blueprint of the market, previous price action, in terms of how it built up from previous sessions. I started to incorporate custom sessions as well. So I wasn't just using day TPOs and month TPOs. I was using, you know, TPOs from a certain time period, and I still use them till this day in my trading. And that's where I sort of found an edge in terms of using those to find certain levels of where people might not be looking at. So yeah, after using that for a while, eventually I did get to a point, another stumbling block, where my trading was sort of falling off per se. I was going back to doing the premature trades just because I wanted to try and catch couple of trades, and everyone goes through this phase in trading. Like, you'll have a couple of weeks where you're consistent, you're doing the plan, you're following with, you know, your game plan going into the week or going into the day, you're doing that properly. And then just one weird day you just go off track and it just ruins and undoes, is that a word? I don't know, but it undoes everything that you've literally done in the past week or day. So I was having those way too often, and I wanted to incorporate something that was a little bit more consistent in terms of my entries. And this is pretty recent. I only just added this into my charts roughly 3 months ago. And I wanted to make it into something that was a little bit semi-automated, so I don't actually have to sieve out through the footprints and whatnot, because that's where a lot of my errors in terms of my trading was coming from. I was analyzing it way too much. So I wanted to sort of sit back in the driving seat and just let my platform just show me where I should get long. And that's sort of why I sort of was thinking, because I did come across this guy's video a few months ago where he was using this entry model called Slingshot. His channel is called Futures Flow. I'll leave a link in the description. He's got a good channel, I can't lie. But yeah, sort of nabbed that off him. But I wanted to make it into an automated thing where it shows up on my charts and it will give me like a sound alert in my headphones or speakers, whatever I'm using. And that'll sort of let me know, okay, time to pay attention to the charts and now something could be happening. Obviously, I'm not just going to take every single one of them, even though stats that I've calculated do back it up that you can just take these entries alone without even using any of the TPOs, volume profiles and whatnot to validate the trade. Yeah, I started to use that, found way more better consistency in my trading, and I'll actually show you guys a trade right now. Yeah, so going into it, basically was looking at NQ. It's one of the markets I trade. I trade NQ. I'm going to start trading Euro going into next week because I've done a bit of back testing on it. I do like Euro. And I trade gold. I used to trade cable to start off with, and I also say that everyone should trade a market that is quite slow, just because it's just easier to understand when you're getting into this sort of footprint trading with all this depth of market and whatnot. So I always suggest trade something slow first before you go into something that moves a bit faster. But anyways, yeah, getting into it, was literally looking at NQ. So kind of see with NQ near roughly all-time highs. I mean, to be honest, this year we've pretty much been in a bull market in most markets. Everything's moving up except the dollar and what else, bonds, pretty much. So Fed activity. Anyways, yeah, was looking for longs just purely based off the fact that we had this balanced profile. This obviously was NFP, so ignore this, but we had, if I merge these two together, you can see we've got a nice little balanced profile here. Normally with auction market theory, expectation is if it's balanced, you can expect prices to just sort of fade the extremes and respect the extremes. So that's sort of what my thesis and plan was in terms of looking for a trade. And it was more so long just because I realized that all of this sort of price action, that I don't know what that was from, I don't know what caused that move down, but all of that needs to be corrected. There needs to be some sort of participation in these areas of where trade wasn't really taking place. So that was sort of my game plan. Originally I was looking to get long from this value area low, but I wasn't able to get that trade. I had to get in a little bit higher, which I'll show you on the footprint exactly sort of where I got in. This trade was a nightmare because I kept getting triggered for stop loss. Literally, well, when I mean stop loss, I kept moving my stops to break even. I kept getting triggered for break even about 3 times. And I was thinking, damn, this trade is just not gonna go the way I want it. So the last sort of resort, or the last chance saloon really for the trade to sort of work, was buyers to step in when the market was just about to close, and that's pretty much what happened. So if I unsplit these, now that these are unsplit, you can basically see price. Really and truthfully, I should have closed the trade out. I think I entered in around here, Price did come back. It went up first to the value area high, which is my first trade. I probably should have closed some profits here, considering the time of day and whatnot. Didn't do that. Price came back, hit me for stop loss, and then it was just sort of stalling around this area. Good couple of minutes. Let me see what time it was. But yeah, it's probably around here. It was just stalling around here for just too long, and it wasn't really doing much, but I kept entering in because price, I'll show you on the footprint, sellers kept stepping in and it wasn't able to take price any lower than -1. So I just kept entering, and eventually just before the close, we managed to get that push up, and price actually eventually did trade up. I took partials around this value area high. I think, yeah, I took partials around this value area high at the close, and I let a runner just run during into the electronic trading hours. Was monitoring the trade whilst I was at work, and then price NFP spikes up, hit this point of control. I wasn't able to close most of the position out. I closed half around here again at a runner. It nearly took me out again if it traded a little bit lower, because there was aggressive selling post NFP. I think it was cash open, literally sold off. But then after that, comes back to the daily POC, retest it and trades back out of value, and that's why I closed out the remainder of the position for a nice 500 altogether. I'll leave a little screenshot somewhere here. Let's get the footprint out. So yeah, going into the footprint, basically, as you can see, there was so many times sellers tried to break past this area. They tried again here. I think I probably entered around here. No luck. Tried again here again. You can see here -820. There was probably more sellers here, but you know, they closed with a bearish delta, but a bullish candle indicating that these sellers were being exhausted here at -1 and absorbed as well. Comes back again. Looks like it's gonna break. Doesn't break. You get a slingshot trigger here. This is where I entered again, and then yeah, you can see price just after that skyrocketed higher. I think I got out here. That's why I closed some of my position around here, and then I just held the rest. And then yeah, you can see coming into the next day, buyers still pretty much in control. Price never really trades outside of -1. It's pretty much above -1 as well, where the action's taking place, and price just moves higher. NFP, which is why you don't really see a lot of, you know, transactional data, because no one's really, most of it is just algorithmic trading. It's just AIs executing trades at rates that humans cannot do. So yeah, price trades up is literally where price comes to, and then it sells off. Literally cash open, it sells off, and then yeah, pretty much concludes that trade. So that's sort of my sort of way of trading now. Is literally I'm looking to see what can happen on the footprint in terms of buyers and sellers stepping in and holding a certain level. I've also got other charts that I'll use. So for example, this is just on Euro. I've created this sort of study. It basically just shows possible areas of where price might reverse in terms of sellers and buyers. So typically, you know, the way this study works is it just shows you where buyers and sellers are being absorbed, potentially indicating where a reversal could take place. So I've sort of set it up so that buying absorption only shows above VWAP, and selling absorption only shows below VWAP, sorry. And I've also put in here a exhaustion study, so that basically shows you the outlined sort of candles basically show you where buyers or sellers are being exhausted. So blue is for buying and selling is pink. I've also put in divergences as well. So I've got buying divergences to show below VWAP or at VWAP, and I've got selling divergences to show at VWAP or above VWAP. And here I've just got a normal RSI. So I'll use this chart as well in Confluence to look for a trade. Another chart that maybe I can show you guys. Do I have any? Yeah, we'll go with this one. Then here as well, this is just a standard, you know, colored Renko. So it just shows you where there's high buy side delta, high sell side delta, and then the green outlines just showing you where there's a lot of volume. Now I've also got the heat map here as well as the exhaustion study on the candles. So I sort of use all of these things in Confluence. I've got other charts as well, but I'm not going to bore you guys to death in this video with all the other charts that I've got. I've used all of these charts together in tandem to build a story and execute my trades. So my sort of rule of thumb is I want to have at least 4 to 5 Confluences stacked together to give me a better favor of the trade working in my favor. Sometimes if I'm feeling, you know, quite FOMO, which I shouldn't be, but we all have it as traders. Like, you all have FOMO at one point. If there's like 3 Confluences I'll enter, but I'll enter with less risk because I know that it's, you know, it's least likely that it's going to work out in my favor. So why am I going to go remove my full risk? Let me size down, manage the position better, and if it goes in my favor, it goes in my favor. If it doesn't, then it doesn't. That's trading. You're not going to win everything. You're not going to, you know, make $200-300 or however much you want to make each day. You just gotta manage each trade, make sure that your risk is appropriate to your account balance, and yeah, that's how you build consistency. That's how I build consistency in my trading. And I still struggle as well sometimes with my consistency. Sometimes I'll have a week where I'm not doing what I'm doing, and yeah, it's frustrating, but then I just sort of recalibrate on the weekends and go back to what I was doing, have 2 weeks of good trading, which sort of offsets that week of bad trading for me. So that's basically where I'm at right now in my trading. I might do a bit more videos in the future in terms of trade recaps. Maybe I might do one next week. Again, if I take any trades that are good, I'll also upload any losses I take as well, because I do take losses. But yeah, let me know what you guys think in the comments below, if you guys want to see more videos or whatnot. But yeah, until next time, see you guys in the next one. Take care.